BizNews Briefing, Wednesday, the 25th of September. I'm Alec Hogg, editor of BizNews. Coming up this evening, my colleague Chris Steyn spoke to Nicola Turon about the controversy around the Stellenbosch Council's decision to close the Wilgenhof residence at Stellenbosch University. We'll delve a little deeper into the bromance between Cyril Ramaphosa and Elon Musk. SAB Miller, or rather the South African version of it, rides again. You can buy into the management team in a North American listed company called Molson Coors. We'll hear more about that from Sean Pesh. On a day when commodity shares rocketed, Magnus Haystack tells us what South Africa needs to do to participate in the next commodity boom. And then we find out why those commodity shares rocketed. The FT's bureau chief, Joe Leahy, gives us the insights into the Chinese stimulus package. On top of that, I'll be taking you through the markets. But let's kick off with the big story that's rocking Stellenbosch University. The council at Stellenbosch has decided to close down the historic Wilgenhof residence. My colleague Chris Steyn spoke to Nicola Turon, who's the spokesperson for those who don't want the residence closed.
I think there's an absolute sense of shock. I think it's human to always hope that, the worst may not happen. I think there was really strength in the submissions that were made on behalf of current Wilgenhofers, where they tried to really illustrate to the council through their submissions, this whole idea of a transformed res that already is the case in their views. It's not my opinion, it's the opinion of the current Wilgenhofers. The parents emphasized, for instance, the psychological effect it would have on their children. And really, the current mood amongst the Wilgenhofers is really one of despair. And the reason why is that the council decision came out on the 16th of September. They understand, and they are members of this association for the advancement of Wilgenhof residents. They understand there's a court application. But within a week of that council decision, they have all received emails already, either placing them in a res that, they can't even fathom how they must walk into, let's say, Dagbreek or Eendrag as an ex-Wilgenhofer that's now been made out as a Nazi or white supremacist. That's not going to, it's going to be very difficult for the students. And then some of them have simply received an email saying they were too late in their application, which predates the 16th of September announcement, and they will have to go onto a waiting list. So it's really despair. It is, I think, a deep disillusionment with the university environment, which I think they expected to be nurturing in terms of education, nurturing in terms of their duty of care. And I think they feel abandoned really by the university. I think that's the overall impression. And they are courageous guys. I spoke to my son yesterday. They proceeded to have a Heritage Day celebration with the rest of the community, with their cluster. They want to participate in university celebrations, and they went ahead amidst this feeling of gloom and disappointment.
That's Nicola Turon, who's the spokesperson for the group that is resisting the closure of the Wilgenhof residence. It's a big story, this one. It might seem a little isolated, but many members of the South African business community do have an involvement in it. They are being former Wilgenhofers, as she put it, they're very upset about this, and there's some significant resistance. The Stellenbosch University can expect some court action, and that's likely to continue for some time. We'll be continuing to follow that story as it goes forward. Yesterday, my colleague in London, Linda von Tilburg, brought us up to date with a bromance, or so it appears, between Cyril Ramaphosa and Elon Musk. She also sent me a picture of Elon Musk later having dinner with the Prime Minister of Italy, a very attractive lady who he seemed to be making eyes at. Well, he wasn't quite making eyes at Cyril, but I don't think that Mr. Ramaphosa really wanted that. What he wants is Musk's money, and for the South African-born and raised super entrepreneur to bring some of it home. Let's pick up with Linda on that story.
Well, Cyril Ramaphosa is leading a delegation of dignitaries, including ministers. We see in the footage also our Minister of International Relations, which is Lamola. So they're going to attend the United Nations General Assembly, where Ramaphosa will also be addressing the assembly. So his visit at the moment in New York will continue until the 30th of September, when South Africa will be having various meetings and, of course, this big speech of Ramaphosa. And interesting, he met the world's richest man, Elon Musk. Now, Elon Musk, as you know, his history in South Africa is a bit checkered. He, at one stage, was giving money to his old Pretoria Boys High School, but he didn't really engage fully. But we've recently also discovered a story of his mother, May Musk, engaging in South Africa and, helping to fund this grant at the University of the Free State. So this what was termed a bromance with Elon Musk is really interesting. And they clearly seem in the footage that very at ease with each other. They're talking about a visit to China, and Cyril is saying, thanks for coming up to my room. So, that's where he met Musk, which tells me it's probably quite an impromptu meeting. The fact that it was just in his hotel room. And of course, everybody who was there, Lamola, and including Vincent Ngwema, who is Ramaphosa's spokesperson, obviously jumped into the pictures. They all wanted to be filmed with them. So this is quite interesting, and South Africans will be watching this to see if there's any development on the issues that has been raised with Musk, which is Starlink. Can we get Starlink? And and also what is interesting, I think we should talk about also, Alec, is how more at ease Ramaphosa is at the moment when you see this engagement. He's become really stiff, and some of the stuff is so defensive, and suddenly he doesn't seem to be like this anymore. So this link between him and Musk, which is already, on social media, a lot of people are talking about, is really interesting.
The Prime Minister of Italy is Giorgia Meloni, and, well, she's quite some competition in the look stake if you are trying to win over Elon Musk. Interestingly enough, we had some feedback from those close to Pretoria Boys High to say that Musk did not withdraw after giving them R1 million and then saying, just don't contact me anymore, that he continues to support his old high school. Interesting to get that input. We are looking to engage with the principal of Pretoria Boys High to get the inside story there. Well, at the BizNews conference 2 weeks ago, tomorrow, it's amazing how time flies, one of the world's top asset managers, Sean Pesh from Ranmore, gave us some insights into a very unusual opportunity for investment for those in South Africa who bewail the departure of what was once our only world-class company, South African Breweries. It seems that a group of South African breweries managers are now running a company called Molson Coors. Let's listen in on what Sean told us about it.
Tell us a bit more about Molson.
Well, what was quite interesting about Molson Coors is that many companies in the US, because interest rates were so low, they borrowed money. And in fact, that company, Big Lots, did a sale and leaseback, and then they sold the company silver, got the money, used that money to buy back stock. Okay.
And as Marcus has come to,
it's just a disaster. But here was Molson Coors. So what happened is when SAB Miller got acquired by AB InBev, they had a joint venture in the US with Molson Coors, and that meant that Molson Coors, if there was ever any corporate takeover, Molson Coors could buy the share of the joint venture that they didn't own. So it's preemptive. Well, of course, they're the only buyer, so they got a good price. And they did that using debt. And so I think they paid kind of 9-10 times earnings, which means you're effectively investing a 10% return. And they funded that with debt. And then they've used the cash flow in recent years to repay that debt while interest rates were low. Well, that's quite savvy, because as soon as interest rates, go up, you've got far less debt paying those high interest rates. So they've been very savvy about that. And then what happened is there was a bit of a marketing mess last year with Budweiser and the whole woke thing, and a lot of Republicans turned against them. And so they boycotted Bud Light. Well, that benefited Coors Light, and it benefited Miller Lite. And so what that meant is they then sold more beer, and of course they made more money from that, and they could use that money to reinvest in marketing and gain market share. Meant they got better space in the supermarket shelves, which meant they got, and it just fed on itself like that. So the management team's been quite astute. So the management team's been quite astute. And so we like that. Here you've got a company that is doing well. Beer, interestingly, is less exposed to private label than other people. I come home, I might buy Waitrose pasta or Asda pasta or Sainsbury's cornflakes or whatever, but I'm not going to buy Sainsbury's beer. Okay, and so beer is more insulated from the risk of private label, because in tough economies, people no longer buy the brands, they buy the private label brands. And it's probably one of the reasons, I think maybe why Boxer's doing well, I don't know. Some of these private labels, I don't know whether it's as big a thing down here as it is overseas, but some company like Carrefour sells nearly 40% of its products on their private label, their own brands, and they make more money. So, so we like Miller's Coors.
South African connection with Miller's Coors.
Well, the CFO and the CEO are South African, and they came out of SAB, and I think they've been doing a good job.
Well, isn't that an interesting story? Gavin Hattersley, who's come out of South African breweries, and he's now the chief executive of Miller Coors, and his right hand is also from South Africa. Interesting story, and one, if you are scratching around for a value play around the world, this could be just the ticket for you. Talking about value, it's still early days, but the commodity shares in South Africa had a terrific run today and are likely, one hopes, with the cutting of US interest rates and the stimulus package in China that we're going to hear more about in a moment, to have a pretty good run in the future if. Let's hear Magnus Haystack, who gives us some insights into what is required for South Africa not to miss out on this commodities boom, which is stirring, and indeed for those who are already investing in companies like Kumba, Anglo American, and South 32, Exaro, who had good days on the stock market today. Here's Magnus's insights.
We studied the commodity cycle in South Africa. 2001 to 2008 was an immense commodity cycle. Then another one, a shorter one, I think it was 2011. We could not participate because we couldn't get enough stuff to the harbours and onto boats and get them across while prices were very high. So we lost out very big time. Now you've got China announcing a major stimulus, and I noticed that you've been buying Anglo American, which is a smart move. So there might be a turnaround in the commodity cycle. The question is, will we benefit? Will we get enough coal, iron ore, manganese to the harbours? Because that's the infrastructure that needs to be fixed, and fixed very fast. Otherwise, and booms don't last forever, we're going to miss another boom. And I think this is now in the hands of the government of national unity. It's theirs to lose. If they stuff it up, it will be it will not be a good state to be in. But it seems to be new energy has been injected into cabinet. The DA is shaking the tree in many areas, which is welcome news. And again, it's there for the taking. We can benefit from this.
Going back on another mega trend, there was a period in South Africa's recent history where anybody who was anyone, wanted to invest in Africa. And that is slowly being unwound. We saw Tiger Brands losing famously R1 billion and then having to pull out of Nigeria. Nampak took a hiding as well. But today there was confirmation that the property companies Hyprop and Attack have now shed their assets, their shopping centres in Nigeria and Ghana. Do you think anybody's learnt anything from this where it's almost like a fashion? Let's go and do something, and everybody rushes in and then come back with their tails between their legs, forget about it in a few years, and off they go and do it again?
You know, very few South African companies have managed to crack not only Africa, but, you know, the global market. I mean, we know about Woolworths, who lost a huge amount of money in Australia, and these South African companies who all went into Africa with great expectations, thinking they can replicate their business model from a so-called African country in the south into an African country in the north. And I think the odds were just stacked against them. I think you can put MTN into that as well. The culture, the language, the way they do business was just totally different. And, you know, I happen to at one stage know the CEO of Virgin Airlines in South Africa, who were trying to break into the Nigerian market. And he would, for instance, tell me that the business operates on a level or a pattern totally unknown to South African business people. For example, he would have to fly with a suitcase full of dollars every month to go and pay the people in cash because you couldn't trust the banking system. And then it becomes, even Branson couldn't crack the Nigerian market, and they folded and left. And I think a lot of South African companies are not saying explicitly why they pulling back, but I think they came up against the same obstacles, different culture, different political setups, and it just didn't work.
Magnus Haystack's always great value, isn't he? Well, he's changed his mind. He was very bearish on South Africa. He's not exactly bullish yet, but he certainly is putting some of his clients' money into South African equities. And a couple of things that he raised there that are worth elaborating on. First of all, you can watch that full interview on BizNews TV. That's on YouTube, or by going onto the BizNews website. You'll pick it up there. He mentioned that we've been buying Anglo-American. Well, in the BizNews premium offerings, we include a monthly webinar in which we have recommended equities that people can buy. We started the global share portfolio in December 2014. It's done terribly well. In Rand terms, a compound annual growth rate of 20.5%. What that translates into is, it's quite astonishing when you think about it. 2.5 million Rand is where we started. It's now 13.5 million Rand. So you grow money at 20% a year, it grows very rapidly. But what we've done there is added to the portfolio Anglo-American on two reasons. The first one being that the commodity boom now appears to be taking hold. This with the story that's following in a moment, the massive Chinese stimulus package, and what's happening elsewhere in the world with the cutting of interest rates, which should be good for economic growth, and that helps commodities. But secondly, when Anglo-American was attacked in a hostile takeover bid by BHP Billiton, the management team came up with a plan to unlock shareholder value. So you've almost got two strings to your bow, if you like, in Anglo-American today. The share price very firm, and we'll talk in more detail about that later. Here are our partners at the Financial Times of London with the FT News Briefing.
So Tuesday's measures were quite unprecedented, at least in recent times, because we saw the central bank cut interest rates and also cut the amount of reserves that banks have to hold. And at the same time, they also announced a lot of measures to boost the stock market and the real estate market as well. So it was bigger than what people have been used to. So we've seen the government doing much more sort of incremental stimulus, and of course sparked a little bit more optimism than we've seen associated with recent measures by the government.
So, Joe, what sort of problems in the Chinese economy are these measures supposed to solve?
These measures are directed partly at the property sector. So China's having this very prolonged and very deep property market slowdown. And as part of what we saw yesterday, the central bank cut mortgage rates. The other very big problem is after the real estate sector crisis, consumer confidence, household confidence has dropped dramatically. And people simply, they're not buying as many things. So we've started to have deflation in the economy. At the same time, the government's been pushing manufacturing to make up for the gap in domestic demand. That's leading to a lot of exports. So there's a lot of concern at the moment around the Chinese economy where deflation becomes embedded and it becomes very difficult to shake that off.
Yeah, and one thing that kind of strikes me is that a lot of the measures that you've mentioned, cutting the interest rates, supporting the stock market, these aren't things that are going to send cash directly into people's pockets like we oftentimes see with stimulus measures, right?
Yes, and this is the central problem, I think, and the main criticism so far of not only this stimulus package, but of most of the measures that the government's announced so far. I mean, essentially what you have is people don't want to spend, they've lost money. Companies' profits are also sort of declining in line with deflation. So they're either cutting salaries or cutting jobs. So you're getting into this kind of a downward spiral. And economists believe that, the best way to break that is through strong fiscal spending that puts money directly into the hands of consumers and households. But that's something that, we've never really seen in China, and it's kind of runs counter to, if you like, to the political culture. The government here doesn't want to be borrowing money so that people can go out and just spend it. So this is a big issue, and this stimulus package that we've seen this week really does not address this problem.
So given that criticism, then, do you think that this intervention is going to be enough to turn things around?
Yeah, I think this intervention, we may see some action on the stock market, but I don't think this is really the point that the economy is going to turn around. We're going to have a lot more liquidity in the system. There may be a little boost in some parts of the property market, but until we see that bigger sort of fiscal stimulus coming through or something else changes, I don't think that we're there yet.
That's Joe Leahy, who's the bureau chief at the Financial Times in Beijing, and he was talking to Sonia Hudson, the anchor of the FT News Briefing. Well, it's a green screen for the JSE today. All share index 1.5% better. Resources and industrials were more than 2% higher. Financials lagged a little, about 1/3% better. The rand improving across the board, 17.20 against the US dollar and 23 rand against the pound. As far as the individual stocks are concerned, it's been a particularly good day for resources, although the best performer on the day was Adcorp, which was up 9.5%. But outside of that, Kumba was a 9% gainer, South 32, nearly 8%, Anglo American 7.8%, and the list continues like that. On the way down, Choppies, a company that's in the retailing sector, did release its financial results today. Headline earnings per share were down by 30%, and as a consequence of that, the share price fell quite significantly. Choppies was off today by 7%. Alexander Forbes 7% as well. Afrocentric 7.5%. Naspers was up 6% today on that news of what's going on in China, the stimulus package in China being a very big story as far as the international investment community is concerned, and for Naspers. But we're going to end off with something real fun about Heritage Day. But before we get there, Warren Buffett secured one of his best ever investments when he bought in 2008 a big slug of a company called Bank of America, the second biggest bank in the United States. Well, earlier today, news came through that Buffett had managed to offload a large slice of that another $800 million worth.
Berkshire Hathaway sold an additional $863 million worth of BNA stock on Tuesday. It brings Berkshire's stake closer to a 10% regulatory threshold. After selling BNA shares over the 3 trading days through Tuesday, Berkshire now owns 10.5% of the second largest U.S. bank. And as long as Berkshire remains above that 10% threshold, it must disclose trades within a few days. Berkshire's remaining stake in Bank of America is now worth $32.1 billion based on Tuesday's closing price, preserving its position as the largest shareholder. In New York, I'm Doug Krisner, Bloomberg Radio.
To understand quite how significant this was, we need to have a look at the Bank of America share price going back to 2008 when Buffett did the deal. It was quite an extraordinary transaction where he managed to get warrants from the company. He injected $5 billion into Bank of America to help it to overcome the problems that were being faced by the global financial crisis. And if you go back to 2008, the share price of Bank of America dropped from $53 all the way down to $5 at one. In fact, below $4 at one point. It looked like in early 2009 this company could go bankrupt. Buffett stepped in. He bought preferred ordinary shares and then warrants to buy another 700 million shares at $7.14. Now, that $7.14 has translated into a sale at $39 a share. Who said the boss of Omaha wasn't a smart man, didn't know exactly what he has been doing? Well, before we leave then, let me just give you a little bit of insight on our final little clip for today. This is from the internet, and it was to celebrate Heritage Day from Alec Hogg and the team at BizNews. Cheerio.
Hello, I'm Shirley. Weirda. Dumela. Sabona. Spring. It's September. And it's Heritage Month in South Africa. We are the Rainbow Nation because we have so many different, beautiful cultures and people. We have 12 official languages, including sign language. And that's not all. South Africa has 2 oceans, the bush, the desert, forest, and everything in between. Which means we have a rich diversity of animals and plants. What's the range of words for that again? Fauna and flora. People all over the world come to see it. Look! Springbok! Let's not forget, we have the Springboks. Springbok is our national animal. And also the best rugby team who has won the World Cup 4 times. We love a good time. We love to braai. We love to stay wild. Happy Heritage Month, South Africa, and stay wild.